The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Everyone, Basil Chapman, Tiger Technicians Hour on this, I almost forgot what the day is, 19th day of March, halfway through the month. So quick. And we're looking at the E-mini. I did a show for Larry this morning at 9 o'clock Eastern Time. Larry's he's commuting. I can't remember where he's going, but he's, I think, on a plane. So we were looking at this 10-minute chart, and it made this cup formation. And I said, in the Chapman wave methodology, there's a particular technique that we look at. Let me see if I can find it here. Is this it? Yes. It's called the drop bucket or double top pattern. So this is chapter, I think it's chapter 22 in my CD introducing the Chapman wave methodology CD book. And this is what we're looking at. When the technicals are such that you get back to the previous high in a cup formation, you can even make a left side, right side price time match with a plumb line in the middle of the bottom bar. See if it goes, in this case, four bars up and four bars down and 4 bars up. And what happens? Number of things can happen. Here's the same chart, shows you the technicals. Look, the MACD started to fail on this particular right shoulder lip, and the stochastic was way down there, and then it failed. This one went all the way down. This is Caterpillar from way back. This is back in 2002. It's just the chart. It doesn't matter. Chart doesn't matter where it comes from. It's but the pattern is what you're looking at. So look at our pattern that we're looking at this moment. We're looking at, this is what we were looking at this morning, and I said, be careful, because my rule of thumb is that in this particular pattern, if the technicals are failing, which they absolutely were, then what you've got to look at is if it goes 1/3 to 1/2 very quickly from the right side lip, that double top from the previous high, and it comes back 1/3 to 1/2. Be careful, because there could be a very quick move to the bottom of the cup, and if that is taken out, and I said 24,048 was the low. If that gets taken out, 24,445. 2845 to 2844 would be really important support, because if it goes lower than that, you've got your 1-to-1 to the downside. Well, what happened is it went exactly there. Look, the low was 2844.50, and then it started to rally, and it made another left side, right side price time match, and suddenly it breaks out to the upside. Now the question is, because the start of the previous buy mode went all the way back to 2841.25 at 110 this morning, this in fact could be alternate count G/A, but it is so strong. The MACD is so strong. It's even stronger than it was on the way down, and the stochastic is now right back to 86% after being at 30% just a couple of hours ago, maybe less than an hour ago. I'm looking at this and I'm saying, I like this. This is really good action. So there could be a pullback based on this peak E in the Chapman wave 2-minute chart. Remember, I do this because it's teaching us, and me, I keep going through the same thing to review it. It's telling us that this 2-minute could be a daily chart or a 120-minute chart. The 5-minute could be a weekly or a daily, and the 10-minute could be the next time frame. Could be a weekly or a daily. So it's 120 or a weekly. Sorry. Daily, weekly, monthly, or in this case, you could treat it as 2 minutes, 5 minutes, 10 minutes. It could be a 120-minute chart. Daily, daily chart and weekly chart. Just time frames, that's all. So this peak E is going to pull back. Watch this level, 2854 here on the left, automated Chapman wave resistance and support line. See what happens there. Now let's get back to our story. Our story is that we've got mixed indicators, and the Qs are actually leading The S&P is next. The Dow follows. IWM is lost. I like it when they're all in sync. When one is lagging, it says just be a little careful. Look to see where the leader is. And in fact, in this case, it's the fact that Boeing, let me just go there. Boeing actually had a bit of a rally earlier on. Now it's up 3.86, but it was up at 378.77, so about 2.5 points higher. It's really working on. I know people are saying, oh, this is the low, this is the low. If you want to see a low, LOW is interesting. It's starting to rally, and that's lows. And why do I mention that? Because HGX, the Philadelphia Housing Sector Index, it needs to get going. And you want to see Lowe's and Home Depot start to move higher. They're doing it over the last 2 days. That's not good enough. I want Home Depot at 185. I want to see it trading in the 189.90, 190 area. I think that would be fantastic. I want to see Lowe's, LO, never as popular as Home Depot. Yeah, look at the chart price. Chart price is, hey, we're doing great. Lowe's is at 103.98, up 2.12 right now. In leg B, with the MACD still to turn up in the daily, the stochastic is only at 30%. There's a lot of work to be done. It needs to get to 112 for us to really say, wow, that is fabulous. Now we've got rotational leadership. We haven't got that right now, but we do have the XLF, which is the financials, acting quite nicely, up 9 cents at 26.99, broke out above the recent highs. It's in leg B in the weekly chart, with the technicals really improving a lot, 83% in the stochastic. MACD is strong. It's this bar right here, that ugly bar of the 7th of week of the 7th of December, 27.47 high, 24.93 low. I mean, that was a whopper of a down move. I want to see it trading comfortably above 27.47. So we're not there yet. The high today is 27.10. It's a good start. The weekly chart is much, much better. It's had a move from the 22s to the 27s. That's 5 points. It's almost 20%. I like that. This is the Spider, S&P Spider Financial Fund. I think this is good action so far. But now I can start to draw in for the weekly. It had this Chapman Wave dreaded H pattern. What's the dreaded H pattern? My CD book right there in chapter 17. Let's go to chapter 17. Click. Dreaded H. So this is a pattern that looks like a lowercase h. Here it is. What did I do? There it is. So dreaded, I think I did 2 of them. Yep. The dreaded H is where you come down sharply, and then it makes a little arch formation trying to rally, and then it takes out that left side low, plummets low, and eventually there's a chance that you could make a lowercase h that goes to a lowercase m. We've seen that in a number of charts over the last 2 weeks. So now let's see what we're looking at here. We're looking at, whoops, no, wrong chart. We're looking at here. We're looking at this pattern. That was the H pattern. Then it made another little H pattern right there, and it broke down. So 30.33 down to 22. That's a big 8-point drop. Now it's come back strongly. Now I can draw in a trend line as we go to a break with the Dow up 173, S&P up 17. I'll draw this in, and we'll talk about this pattern called the Chapman Wave Falling Axe Formation. Falling Axe Formation, chapter 24. We'll go there as soon as we get back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So a question here in the Den, someone said, great, interesting V-shaped pattern in the XLF. Yes. So now I have no choice. I take away this arch formation because this was the question. Will it break above those candles right here on the daily chart? Would I get? I couldn't get a left side, right side price time match because we took 1, 2, 3, 4, 5 bars down and 1, 2, 3, 4, 5 bars up. We hadn't even gotten close to the high. So that says that was not a failure. That was a very positive breakout. I get rid of the arch formation and says, and as I discussed this earlier in Larry's show, I said, in my experience, now I've not done a study, although I have read some studies that are close to what I'm looking at, but I believe I'm correct in saying a lot of the time when a previous peak or trough is taken out very powerfully, preferably in a shorter time span or within close to the time span of what the plumb line, that is the low bar or high bar reversal, is indicating, if there is a decisive close, I mean that if there's a close, I wish I could give a point or a percentage. It varies so much, and it has to do with the technicals. I can do it visually in a split second, but I can't give you a theory for it. I can just say that the high that was made double top at 26.94, both on the 1st of March and the 4th, that's Friday, Monday. If that's taken out, yesterday it was just nicked above at 26. Is that 98? Yeah, 98, but then it closed at 26.90, so it was underneath. Now today it's up above, and it's at 26.96 right now, having hit 27.10. Having hit 27.10 for me is really positive, but it really is the close over 2-day period. I usually say 2 out of 3 sessions. So in this case, it's a V instead of inverted V, and it's sharp, straight down. In fact, no troughs to the downside, and on the way up, no peaks to the upside. That's very powerful. That's like it means if you went to sleep for 3 weeks and your stock was at 26.91 and you wake up here and it's at 26.97, you say, ho hum, nothing to see here, very nice. You don't know that it actually dropped to 25.60. So it actually dropped a point. So, that's 3 something percent. So all I'm looking at this is saying that's a very powerful move. When you take out that left side high, in a V-shaped formation, but I want to see the MACD cross positive. Whoa, wait a minute. It just crossed positive. Look at that. Nice. I want to see the stochastic at 80% or higher. Ooh, 79.9, 78.97. Getting there. The on-balance volume, the blue line is very strong. So far, all I can say is this is really good action. And we are lucky we have financials that have done very well in this little period here. Well, one we've had for a while, but in this period. And I think this is nice. So I'm going to just normally, because we haven't taken out the starting point for the buy mode that took it to peak E, it only went down to the 2560s. I'm going to call this F/A. F says, woo, be careful. A says, woohoo. You could buy here. You could buy on a pullback. You could buy it all the way because it should go to B, C, or D. But I don't do that. I think you have to have a little patience because based on the 120-minute chart, getting a little toppy here, there should be some kind of a pullback over the next day or so. That's when we're going to make a decision. And then if it goes to a new recovery high for a new leg up, that's very positive. Okay? So what I'm saying is this is important to me in the overall smorgasbord of what we're looking at. The XLF, I wanted to see it for a long time. In my webinars, I've spoken about it. We've owned a bank stock, taken profits, got back into a bank. We've added financials. And now in the den, here's another good question. The IAI, which is the, right here, the IAI is this iShares Broker Dealer and Securities ETF trading at 61.61, up 23 cents. This is nice action, not great action, but very nice action. It is a gray leg A because the stochastic is only at 51%. I needed to go quite a bit higher, and it hasn't yet. And the other thing I'm looking at here that I think is really important is that the weekly chart is acting well, but not great. And I'm disappointed that the broker shares haven't really spiraled much higher. I'm disappointed. Looking back. Looking forward, I think we have started a move, and it's going to be a huge tell for me if at any point in the next 6 weeks you see the IAI trading above 63. You see, here's the conservative Chapman wave trend line falling axe resistance. I could put another one in here in the monthly because I treat this one as the pink one. Let's make it pink or red. And then the next one's going to be green, and that's the breakout one. That's the one you want to see, decisive break to the upside. And that would be right there. That would say that on a monthly basis, if there's a close above 63.50, a close, that would be the first really good positive sign on price. But the MACD is still way sluggish, and the stochastic's only now turning up at 41%. This might be a laggard, but it's one that's really on my list. We do have a brokerage stock, though, that's acting extremely well. In fact, to me, it's a little bit of a benchmark, the one we chose, but it's just one of many. It's not this one, Ameritrade. Let me just look at Ameritrade. Ameritrade is called TD Ameritrade Holdings. Yeah, it's got the same kind of pattern. Yeah, this is one also very important. Ameritrade, I want to see at 55.91. I want to see it trading in the 59s in the next 6 weeks. If it does that, I think we're on our way finally to get the public into the market. All right, another question I had, TGODF. Is that thank God, oh, dutiful, F, I don't know, food. Yeah, this is looking very good. What is this? Green, or I should have known that. Green Organic Dutchman Holdings. Oh, isn't that interesting? I'm putting this on my list. Why? Because, let me just write this down. TGODF. This is Green Organic Dutchman Holdings. And the reason why I'm thrilled to see this is because it fits in exactly, in fact, it fits in with someone that I was talking, or not talking, but emailing with or texting with just this morning to say, I'd mentioned quite some time ago that I would not be surprised if the cannabis stocks are there for the big coda move that really tells us that people are going crazy. Once again, like in 2000 with the high techs, I wouldn't be surprised if we see that in the marijuana stocks. One of the reasons why we own MJ, which is the ETF for the cannabis stocks. So this is called Dutchman. But wait a minute, what is this? What's the theme here? The theme is, I'll put it in. No, I didn't mean to put an up arrow. I'm going to put this in. Tulip bulb mania. Dutchman. There are the Dutch 1630s all-time high in the tulips, but it's so fascinating that it didn't affect the general public. I'll talk about that someday. It really is very interesting. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back, and I'm looking at, let me see, Hexo, HEXO. Trading at $7.06, up 32 cents. Hexo Core. I haven't had a chance to even see what they do. Maybe someone can just tell me what they do. Probably another cannabis stock, the way it looks here. Hexo. Why would Hexo be a cannabis stock? I could be patient, I guess. Yep, it is. Okay, pot stock. They all do the same thing. And I would not be surprised if they kind of within a day or two of having some kind of a pullback. It's spectacular. It's up 34 cents, up 5%. I'm going to just quickly go I forgot I had that on. Okay. So that is A. Yeah. All right. So I'm looking at this and I'm saying to myself, thin bars, nothing there. 441 to 499. Big percentage moves, but still nothing. 499 goes to 498, goes to good. That's what I wanted to see. So we've got leg A, leg B, leg C, and leg D. And I'm going to call this for now E and leg F. It could be F/B for just for the moment. And the MACD is just broken out. The stochastic's at 86%, 88%, but it's a doji gap up candle. I'm going to do this. I'm calling it an F. I'm actually I want to be safe. So I'm going to call this F/B. I'll tell you why. I want it as a two-prong notation. If the MACD is just now breaking out so strongly to the upside, that says that at 707, there's tremendous support, even though it's a gap from 672 yesterday, 673, and the low today is oh man, the low today is 695. That's 30 cents. This is big. So I'm just going to say I like the action very much. Is absolutely in play. I know this pattern that goes sideways, spikes to the upside. Invariably, you're going to come back, in this case, into the $6.20 to $6 area, but it doesn't give you a time. It says there's a proportionality that says within a week and a half to 2 weeks, you should be back in here trading, and that could take a little longer to digest. If you're in it, I like it. If you were to get in today, our biggest supplier to Ontario. Okay, all right. So what's important that it's gone above that peak G that was made right there a week of October the 19th, 717, plummets down to 287 in a matter of just 3 months. I mean, a 50%, 60% decline, and then it's back again, and then it has a 100% rally. Stock like this, the best thing is every time it drops really sharply, you take a little nibble and you put it in your drawer and you say, that's it. I'm not looking at it again. You give yourself like 6 weeks. And you say, okay, now what's it doing here? Of course, nobody does that. But that's kind of the way you want to play it. Right now, it's getting to the area where you want to say, I want to take something off, even though it's in leg D in the monthly, and the monthly is still strong. This weekly let me just show you something very interesting. A little technical. This is not Technical Friday, it's Technical Tuesday, but I'm going to show you something. It went right to the level that it hit before of $7 and make this green. Look at that. It got to a new high 2 bars later, and it went quite a bit higher. The high was 717. Back on the 19th of October, the week of the 19th. Today's high is already 733. I mean, 16 cents. That's a big deal for a $7 stock. So I'm looking at this and I believe that this should go to a D and hasn't yet made a peak C. So you've got a whole week to go before you know. If there's 2 weeks to go before you know. So I'm looking at this and I'm saying, I like this. This is great. This is saying that, look at the steadiness of this move up. In terms of looking at a base, look at that base that I'm drawing in the weekly chart. So now your next base that has to hold will be in the $4.20 area, $4, about $4.10. Big play. And on the upside, you've just started a trend line that you can draw in with a little bit of conviction that says, if I draw in from the opening gambit high to the recent highs, that targets the $8.20 area. So $8.20, if you're buying it here for $1.20, for about a 13% gain, then the only way I don't know if there are options on this. If there are options, I'd say I'd go to an April option, and I wouldn't go out the money. It's just not worth it. I try to be in the money and in other words, for very little money, you're playing a tremendous upside potential. And yes, you've got a risk of, I wouldn't say all of your money, but at least 50% of your option. Well, that's a 50% to make 300%. I'd say that's something that might be worth it. Okay. But on a purely short-term basis, I think this gap's going to get filled within the next couple of days. So 650 would be my next look at the entry. Give me a yell, Kelly, if you can, and we'll look at it again. CTST, CTS. I know that there's going to be a point where the whole show will be pot stocks, and that could be pot luck at that point. Yeah, there's another one that's acting really well. Hey, good eye, good picks. It's broken above the left side high, 10.07, whatever it's called. Cam Trust Holdings, it doesn't matter what they're called. Just remember the symbols. They're in the same category. That's the most important thing. All right. So that is good. And it trades on the New York Stock Exchange. So maybe the volume, the 1.8. That's got volume. All right. Next question I had is the SMHs. So I want to be clear. I thought I was 100% clear yesterday. In fact, I had started on the weekend. I couldn't have been more clear. But I'm just saying it again in case there's any question. Actually, before I do that, for my own interest, there was a peak E in the daily 2-minute chart at 28.58.50, and now you've gone down to 28.53. So that's all right. That's very interesting. We're back to where we were earlier on. I said 28.53, 28.54. It was 44. Yeah, 44. Oh, big move up. So we'll see what happens. It's in a sell mode now in the 2-minute chart. Sell signal has just gone to a sell mode in the 5-minute chart, and not yet a sell signal in the 10-minute. Let's get back to our story. So what I said was, and I made it absolutely clear. Let me just find my, let's see. There it is. There it is, and I'll find it there. So I showed this yesterday. I showed this over the weekend. I discussed it in great detail. What I said was, have a drink just to lubricate the vocals. This is the most up-to-date I've got on the semi-shipment breakdown on a chart formation. It's gone into 2019. Massive decline, a massive decline from the all-time highs into 18 to 17. This is the shipments, remember. I know for a fact that going into 2018, there were 20%, 30%, 40, 50, 60, some even at 80% gains in some of the chip area in some of the stocks, some of the companies. They could not see that extend. And they thought it could, but it couldn't. I'll talk about it when we come back. Just to be really clear, I'll be back.
Looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're looking at the estimates, the semi-shipment breakdown. The blue line shows the global leading manufacturing index growth percentage, and the orangey color, already yellow, whatever that is, global semiconductor shipments growth. Okay, manufacturing and growth. Look how bad that is. So when you look at this, and then you look at this, from the low that was made in December, and that continued down into January, maybe not February, but it's into January, the actual percentage move, it's even bigger now. It was 20, I think it was 28% or something like that. It went from the 80 level to 107 yesterday. Today's 107.49. 27 points from 88. That's that's really what it is, 22%. So that's big. And so what I discussed yesterday and what I mentioned in my weekend for my subscribers is very often price moves before the historical facts of sales. And therefore, we might be looking at a spectacular gain in the semiconductors coming up this year, which has already been anticipated by the really sharp drop from 114 down to 80. But this V-shaped pattern on the return in 3 months, look, 1 to 3 months down from that big red candle of October. Yep, October. The high was 108.17. We've just gone to 107.49. I mean, that is, to that candle, almost taking out the high. It took all that time from March of last year at 114.55 to come down to the December low, but it took only 3 months to get to back again. Is that saying that they got overly optimistic in January, February of last year and March, when you can see that they were already seeing a shipment decline? If I can ever find that chart again. Where was that chart? Oh, right here. Yep, there it is. So that means that the highs that were made 2016, in fact, there's been a two year and a little bit, maybe 2.25, maybe even 2.5 year decline, or let's call it a 2 year decline. And maybe that decline is over, and now we're starting to see a liftoff in the stock price because you're starting to see sales. I'll know within the next few weeks. I'll be hearing about that. No, that was in the den. There was a comment. TVIX, that's the VIX, one of the trading vehicles for the VIX. Green, investors buying insurance maybe. And then Jimmy says, it was me. I loaded it up on TVIX. My whole 300 shares moved it. Were it so, right? Hey, maybe you're right. I'm looking at this and I'm saying we're real close to some kind of a digestion with the Dow just because of Boeing and because of other factors just popped higher than I expected. I said between one to subscribers between 1 and 130. The Dow's only up. I can't remember exactly the number. Let me see if I can find it. I said if the Dow is up, there we go. Dow pushes into the 25,950s, 90s, and then slowly slides. When it went high, it went to the 26,000. Yeah, so it's been to the 26,000s already, and now it's at 26,056. So it did pull back, but that was earlier in the day. This is not the 1 to 130 time frame. So right now it's holding very well. So that was the scenario that I had to discuss. So yeah, that's that's what I give subscribers every day, the area to look at. So now let's go back to the SMHs. I'm going to make it real simple. Why? The day is young, but as of now, and I'll circle it, but Justice might have to come off. I'm circling this just to show you that the MACD finally crossed positive, number one, from the pullback that we just had from the 25th of February high of 106.27 down to 99. So that's 7 points. It's about 7.5%, 8%. And then it ran up in a quicker move in the V-shaped pattern above the rest of the highs, above the 106.27 high. And now what I'm looking at is the MACD's just crossed positive. Stochastics, finally at 80.73%. It's at 80%. That's the level that I always like to look at. And that says if the stochastic has a sharp pullback because the price tomorrow goes under 106 and the MACD deflects lower, I could turn around and say this is the Chapman wave double hump pattern, and then we could be pulling back quite sharply, fill the gap under 104, say let's call it 104.60, and then try to test 104.12, the 9 and 14 period moving average area. But as it stands right now, it's nicking the resistance line, the Chapman wave inside track repellent final line, the green line right here, make it green. That's good. It's closing, not closing. It is under it right now. So the next 2 days are very important. Why? Just real simply. If at this stage it goes to, this is a leg C. If it was a B, I'd say, you got to be careful. But F/C says good chance there's a bit of a pullback and then another pop to the upside. And then I'm going to look at the SMHs and say, is there a chance now that we could get a deeper pullback, even if it's just 4 points? That's a lot of points in this particular chart. Or is it just going to go power higher and higher? So the next couple of days are very important. I did want to clarify. I was looking at, I never saw this chart until it was sent to me on Saturday morning, I think. And I thank you for that. And then I used it and I showed it. And I'm telling you that it is part of what, you remember March the 6th when we went along the diamonds back in 2019? If you were looking at projections of sales or anything, they were horrible. And they went down even further after the low was made in price. So I'm saying I've got to consider that maybe the prices move because there has been an improvement in shipments. I'm not hearing that, but I will know more in the next few weeks. But so far, no. It's just saying, this is gone too far, too fast. But no, when you're looking at the technicals, I have to put this into a technical picture and say, wait, the SMHs, all of a sudden, instead of that ugly red candle 3 weeks ago, if it followed up with a lousy candle, that MACD would not be so strong. That stochastic would not be in the weekly chart at 90.18. That is good action. I will not deny good action when I see it, and it's good action. And I have to respect that. We wanted to short. We did short a couple of times. Not doing anything right now. I almost thought about, because the market acted so well with Boeing tanking and everything else rallying, to go long. But no, I think this SMHs, I'm just going to give it a little longer. I am impressed. I said that yesterday. I said that on the weekend. I'm impressed. It's much, much stronger than I anticipated. And maybe it's foreseeing sales demand for their products returning. That's really what I wanted to say. So let's just quickly look at our E-mini. We had that peak. Look at that sell-off. Now, what could that be? Look, peak E in the day, I always say daily. This is a 2-minute chart. Oh, what a nice trade that would have been. All the way from 28.58 to 28.45. Big move down 28.42, I think. 41.25 was the low, just 2 minutes ago. That's a big move. I'll be back. Basil Chapman, Tiger Technicians out. Dow's up. Only 40.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up, Dave White comes up, and then Tom O'Brien. I'll be back with Tom a little later this afternoon. It's so funny. During Larry's show earlier today, as I was about to wrap up the show, I was going to say, oh, I wish we could close the day right now. One of the reasons was that this is the most number of longs we've had in quite a while, and all the longs were up. And I just said it would be great just to wrap up the day with some. One was up even about 12% from when we bought it just 2 days ago. But that's not to be. That's the way it is. You got to deal with what you got. And some of them's pulling back. You got to expect that. They've had really good moves. And here's the E-mini. It made that peak E top in the 2-minute chart right there at 12:04 at 28.58.75. Trading now at 28.43. As always, a little bit of bad news comes out, something about China. Don't forget, there's a lot of play going on here. China's going to be, look, China now has, there's the whole Boeing aspect. Are they going to cancel? If you cancel, you can't get back on the list very easily. There's a 20-year or something, there's a huge waiting list at Boeing. And that's one of the issues that's so big around here. First of all, it's getting more and more complex. And in terms of negotiation, the United States has somewhat has strength, but China has patience. They've always had that. But is their patience now going against them because they have a youth, they have a demographic of lower ages, they have a birth rate that's declining? There's a lot going on. This is very complex what's going on right now. And that's why I want to do my webinar. I'll be doing it come up early April. And I'm really going to be looking at certain aspects of the market. And I still say Trump has claimed the stock market as his own. He doesn't have too much else about it at this particular point. Every legislation is going to be fought like crazy. I don't know what will get passed. So it's the market. How is he going to handle that? How are the economists going to handle it? This is going to be absolutely integral to what happens if we know where the Dow is going to be. If we can even guess in 3 months' time, somewhere in the middle of the early part of the summer, we'll see. The whole late June, early July, that's going to be really important. I'll be back later with Tom. Otherwise, see you tomorrow. Have a great day. Check out my opening call. That's some really nice positions there. And, hey, I'll see you with Tom. I'll see you tomorrow. Have a great day.